I had long suspected it, but only today did I find convincing evidence. The information you will hear in this video may shock you. First, I'll talk about what's publicly known, and then I'll reveal what's hidden from many. This will be a real revelation. Today, Bitcoin is falling again, and at its lowest point, its price reached $55,000. What happened? The U.S. Department of Justice issued a subpoena to NVIDIA as part of an antitrust investigation. Regulators are concerned that NVIDIA might make it difficult for customers to switch to other chip providers, especially in the AI space. Officials also fear the company might punish those who don't use their chips. This led to a drop in NVIDIA's stock, with the company losing nearly $300 billion in market capitalization, the biggest single-day drop in history. NVIDIA lost as much as the combined value of the other 474 companies in the S&P 500 index. It's colossal, and the overall US market lost $1 trillion. The Japanese market also crashed at the opening, following the US market. Amid this, renowned optimist Tom suddenly lost his optimism and became more cautious. Headlines on financial platforms say that Tom Lee has just changed his view on the stock market. He believes that in the next 8 weeks, the market should be cautious, as there has been growth over the past 7 months. It is indeed a strong market, but we also have a rate cut coming in September and elections, which could cause people some concern. I believe that in the next 8 weeks, investors will have a good buying opportunity, and it's important to be cautious and ready to take advantage of this dip. How much could the drop be? I think around 7 to 10%. There have already been to 7% corrections this year, so expect turbulence. However, in my view, the market has not yet peaked this year, and the next 2 months will be challenging. I agree that sharp Bitcoin drops should be used as buying opportunities. A forecast for a 7 to 10% stock market decline is quite a serious correction. On the crypto market, figures tend to be even larger. Historically, September is considered the worst month for the stock market, but November, on the other hand, often shows excellent results. This doesn't mean history always repeats itself, but seasonal trends have their significance, as you can see in the charts. This also affected Bitcoin. Interestingly, even spot Bitcoin ETFs experienced their worst day since May 1st and the third worst day in their entire history on September 3rd, with an outflow of $287 million. The biggest losses were at Fidelity, followed by Scale Harvest and Shui. However, BlackRock continues to hold its assets, and I'll tell you more about what they might do. And it will be shocking. Now I will tell you what I had long ignored and refused to focus on. I understood it, but I only accepted it today. Brokers on Wall Street have been manipulating Bitcoin since the launch of spot Bitcoin ETFs earlier this year. It was from that moment that Wall Street gained more control over Bitcoin's price. Hedge fund manager Mark Yusko claims that institutional investors are pushing down the price by selling Bitcoin on the futures markets. This is a common tactic they have used in the stock market, and now it's being applied to Bitcoin. For almost 200 days now, the price has been stuck in a narrow range. Despite plenty of positive news, the price is still hovering around $60,000. Don't forget to like. This helps promote the video. And now I'll dive into what's happening with BlackRock, their trading software, and who they partnered with early on, and how it's related to Bitcoin. Let's start with what Yusko said. Trading ETFs is not a bad thing in itself, as there is demand for them. But the problem is that Bitcoin's price is also influenced by the futures market, and this is noticeable almost every day. All these sharp drops of $1,000 or $1,500. How does this happen? Who is selling? No one is selling. Those who hold Bitcoin in cold storage or on their balance sheets aren't dumping their assets. No one. Those who hold ETFs aren't selling, but the sale of futures affects the price. There's a small catch in how ETFs work. They don't trade throughout the day, only in a narrow window at the end. If you have a large order and you're representing BlackRock, you want the price to be low, not high. So BlackRock can sell Bitcoins from another wallet on the futures market to push the price down, and then buy them cheaper. This happens on Wall Street all the time with all assets, and now we see it happening with Bitcoin. This perfectly explains what's been going on in the crypto markets since institutional investors and hedge funds started interacting with ETFs. They might know they need to buy Bitcoin worth $200 million by the end of the day due to order inflows received during the day. And this information is provided to them by the spot Bitcoin ETF. By the end of the day, they can try to significantly push the price down to levels where most of the liquidity is concentrated and where they see a lot of stop-loss orders. This allows them to buy assets at a lower price. If you're buying $200 million worth of Bitcoin, lowering the price by $1,200 per coin already saves significant amounts and allows you to acquire much more Bitcoin. So right now, there's massive manipulation happening in the crypto market, which has been going on for 200 days. But that's not the only tool BlackRock is using for manipulation. The company has also developed AI-based trading software called Aladdin, which has been in development since 1988 and is constantly being improved. I'm sure this software is also used for trading Bitcoin. I have some evidence. Coinbase was chosen by BlackRock as the platform for their spot Bitcoin ETF. Through Coinbase Prime, the company gives its clients access to the Aladdin system. Since August 2022, BlackRock has been using this platform for crypto trading. For over 2 years, they've been training their software and AI to better understand Bitcoin and everything related to it. So they're likely using it for institutional purchases, deciding when exactly to buy or sell Bitcoin, depending on the inflows or outflows of funds from their spot Bitcoin ETF. This is a brilliant approach, and ETFs are the perfect tool for such manipulation. I'm confident that institutions and hedge funds like BlackRock are using it to control Bitcoin's price. In the long run, its value will still rise because Bitcoin is a scarce asset with a limited supply of 21 million coins. Over time, demand will only increase, and already some countries, such as Russia and El Salvador, are starting to use it as a store of value or for trade. Perhaps other countries, including the US, will join them. In the real world, cryptocurrencies are finding more and more practical applications, especially altcoins. Look at 2018. Even then, many large companies and institutions were actively involved in cryptocurrencies, conducting research and testing. They didn't just come to the market for a few months and leave. All this time, they've been developing new solutions. Now we see these being implemented, especially in the financial sector, which still remains slow and expensive. Cryptocurrency could significantly change this area. BlackRock and its head, Larry Fink, are closely watching Bitcoin's price, trying to suppress its rise to buy more. They compare Bitcoin to the dollar, gold, real estate, stocks of major companies like Apple and JP Morgan. All these assets, in their opinion, will depreciate over time relative to Bitcoin. Finally, one more important reminder. It's worth keeping your Bitcoins in cold wallets, not on exchanges. A recent FBI statement warns that North Korea is trying to hack and steal US cryptocurrency, including funds from the spot Bitcoin ETF. See you soon in a new video.
On our Telegram channel, you will find the main news, an overview of the crypto markets. We regularly monitor coins that can give big excess. Welcome. See you soon, friends.